if I was to go back into time when I wasn't making any money from trading and I wanted to make $1,000 a day, in this video is absolutely everything I would do. Even if you are a complete beginner or you are lost with all the knowledge you have, this video will help you out and it will make it all click for you. So let's get into it. So before I actually go into the video, you can actually see my profits using this exact model that I'm about to teach you today. So you can see I have about 84% win rate with this strategy, and you can see all the trades, all the profits, all the weeks, and you can see this is my net profit from about exactly 4 months. So you can see I crossed $100,000 in profit in just 4 months at 20 years old. And also, before I actually go into the video, if you want to check out all of these trades, all of the losses, all of the wins on my different channel, which will be down there in the description, where I just post all the live recordings, all the trade recaps and everything. So make sure to do that after the video. Okay, so let's actually get to the topic of this video, and the topic is going to be liquidity candles. So this is going to be very simple strategy that is going to make so much sense. So we are going to talk about liquidity candle because it will show us the actual most important liquidity levels. It's going to be pretty easy because it's going to be very easy to mark out those liquidity levels. You're going to see it later. With this liquidity candle, we are going to know exactly when the market is going to stop out all of the retail traders, so 99% of the people who are losing money, and then after they get stopped out, we are going to get a precise entry that is going to be completely rule based, so you're never going to think about whether you should or should not enter the market. And we are going to know exactly where to enter and where to exit the market so we catch the entire move. And why do I like this liquidity candle so much? Why is it so powerful? Because we don't need no daily bias, we don't need no indicators, and it is all rule based, so you don't need to think about anything. You just need to look at the charts and you just need to observe exactly what is happening on the chart and react according to it. Okay, so now you have to pay attention because right now I'm about to explain the whole strategy in this one picture. So the first thing you need to understand, simplicity is profitability. So this may sound stupid or this may sound like it's not true, but when you actually realize that you want something simple that is easy to execute and that will actually make you profitable, but not some kind of crazy indicators or anything that is so complicated that you cannot even execute the trades, but it actually needs to be as simple as possible, and that's exactly how we become profitable. So let's actually get started with a strategy. So we have a one candle right here. So right here is the daily candle. So what do we look for every single day is we look for the daily candle and we mark out high, we mark out low, and we mark out the middle. I'm going to show you exactly on the chart how to get the exact middle and how it will be marked out automatically, and that is the first step. So all we need to do is mark out daily high, daily low, and the middle. Okay, but right now you may ask me, like, why do we need to mark out the middle of this range? And the answer is actually pretty logical. So let me ask you this: do you want to buy something that is expensive, so up here, or something that is cheap, that is down here? Exactly, like you want to buy cheap so you can later on sell it more expensive and make money on it. So what we don't want to do is we do not want to buy in the 50% of the range to the upside, because this is our expensive range, and we do not want to buy right here, because if we buy right here, what happens if the market goes lower? We are going to lose money because we bought it at a more expensive price. So what do we want to just remember about the 50% of the range is that we do not want to buy when the price is in the premium. So what a premium is, it is this range right here. So from the top of the candle's wick to the 50%, and then we have right here the discount. So all we need to know is that we shouldn't buy in the premium. So we do not want to buy for an expensive price. And now the second logical thing is the same for the downside. So when we are in the discount of this 50% of the range, we do not want to sell. Why don't we want to sell? Because the price of the market right now is cheap when we are actually down here. And what is that going to mean for us? If we sell it, we are going to sell it for the low price. So we do not want to sell while the price is actually in the discount right here. So what is actually the conclusion of all of this? So if you do not want to buy in the premium, which is going to be up here because the price is going to be too expensive. And if we don't want to sell down here when we are in the discount of this range, what are we actually going to do? So what we are actually going to wait for is when we mark out the daily low and the daily high, we are going to wait for the manipulation of one side, and then we are going to target either the middle or the top of the range. And now, what is the logic behind the middle or the top of the range? So when we actually sweep the downside, what we did is we manipulated all of the liquidity on the bottom of this candle. So on the bottom of this candle, because it's the daily candle, there is going to be loads of liquidity, so there is going to be a lot of stop losses on this low. And when we sweep it out, so when the market makers actually sweep this low, when they actually stop everybody out on this low, what are they going to do? They are going to go hunt another point of liquidity. So when the market makers actually swept all of the people out here, so they sold the market from, you can see right here, they sold the market from premium, they pushed it down, they got it below the discount actually, so they swept all of the people right here. So right now they have enough liquidity to buy into the market after this sweep. So if they buy into the market, what is price going to do? Price is going to go above in the premium, and what are they going to do? They are going to sell the price, and then later on they're just going to look for another liquidity opportunity, and then after that they're going to do the same thing. So what we want to do is when the daily candle, when we have the daily range, we want to look for one side to get swept, and ideally we want to target the middle of the range of the daily candle. Why is that? Because we do not want to be in the buy positions while we are in the premium of the range. So we just want to take our trade, take our high probability trade, and we do not need to make some kind of 10 risk to reward on that trade, because if we get 1 to 1, 1 to 2 risk to reward, even 1 to 3, that is completely enough for us. We got our profits and we just get out of the market. And then later on, if we get another sweep like this one right here, then we just look for another shorts towards the middle of the range. And of course you can target the whole range. So let's say we swept this low down here, you can target this high up here, but it's gonna get hit, but not as much as the 50% of the range. And the important detail that I actually left out is that this is the daily candle right here, and the entry is actually going to be done on the 50-minute time frame. So from the daily, when we mark out the range high, the range low, we go to the 50-minute time frame and we wait for the actual setup. But the point is, how do we actually enter the market? So the entry is actually going to be very simple. So when we actually get the sweep of the bottom or the top of the range, all we need to see on the 50-minute time frame is a last fair value gap. So what a fair value gap is, you're gonna see on the chart, but that is just a formation of 3 candles like these ones right here. All we need to see from the first candle's wick to the third candle's wick, we need to see a hole in the market, and when we mark out that hole, we get an imbalance or a fair value gap. It's however you want to call it, you can call it. And then all we wait for with that fair value gap, after we actually get the sweep, so we want to enter the market, we wait for the actual disrespect of that fair value gap. So since the market was going to the downside, we swept an actual liquidity point like this. We want to long the market, so we need to close above the actual fair value gap to then long the market to the upside like this. And to short the market, it's absolutely the same exact thing. We just wait for the sweep of liquidity, find a fair value gap, and then we just short the market, and that's literally it. All we need to see is a body closure below the fair value gap like here, or right here we need to see it above the actual fair value gap, that we actually know that we disrespected it. Because if we did respect it, market could just slowly continue to the downside, and then we can get a potential setup. And what do we actually do is we enter the market on the closure, we target the middle point up here, and that's literally it, stop loss below, and that's all you need to know. So right now, before I go into the actual chart, if you like the video till now, just make sure to leave a like. Also, if you don't want to miss any kind of videos like this where I just help you a lot with trading, make sure to subscribe and turn on notifications, so you are going to get notified of every single video I throw out. So let's actually go to the chart example. Okay, so as you can see, we are at the live chart. So all we need to do right now is, as I told you, go to the daily time frame. So all we are going to use for this model is daily, and then the 50-minute time frame. So all we do is we go to daily and we mark out the previous high and the low of the previous day and the middle. And how do we do the middle? So all we need to do is we need to take the rectangle tool, we need to get from the bottom all the way to the top, and what we do is we actually go to the settings and we just turn on the middle line. I also just turned on the lines so I can clearly see the top and the bottom and the middle. So that's all we need. So right now what do? We go to the 50-minute time frame. So what we have on the 50-minute time frame is our range. You can see the daily top of the range, you can see the daily bottom of the range. So all we need to do right now is we need to wait for some kind of sweep of either one of these sides. So how you can do this, you can just place an alert on the chart, so either here and here, and then when you get an alert, that's when you hop on the chart and that's when you look for the setup. So let's just fast forward the market and see what is gonna happen. Okay, so market right now is in the premium of this range and looks like it's going to the upside. So let's see if that is actually going to be the case. Okay, so we are getting really close to it and there is the sweep. So this is our range right here, as you can see on the chart, and we just swept to the upside. So all we need to do is look for the shorts towards the middle of the range, because we don't want to be in shorts down here because the market can easily reject. So let's see, right now we swept the top and all we need to do is look for the last fair value gap, as I told you guys. So this right here is the last fair value gap, and all I need to see is this fair value gap getting disrespected. So let's see if that is going to happen, if that is going to be the case. Okay, so we are forwarding and I think we are about to get the closure since the market is going to the downside, and here we actually managed to get the closures. So all we do is we enter the market like this, put our stop loss above, and all we do is we target the middle of the range like this. So it's going to be 2 risk to reward, and let's just see how is it actually going to play out to the TP. And there it is, so beautifully played out to the TP within just like an hour. So if for reference you wanted to make money off of this setup from a simple $100,000 account, this would be $2,050. So even more than what I told you in this video, so more than 1K. So all you need to do is get a simple funded account and then you can actually profit using this strategy. But of course you gotta do it at your own risk. You gotta go to the chart, you gotta practice this, you gotta backtest it, and then once you feel like you're ready, you can go onto the actual chart and you can trade this model live. And that is basically it for this strategy. So just before you leave the video, if you liked it, leave a like. If you want to subscribe, make sure to subscribe to the channel. Also, one more thing, if you maybe want to get mentored one-on-one by me, and if there is still spots left, because I'm not sure at the time of you watching this video, so make sure to go down there, check if there is still spots, and you can book the call and check if you're a right fit for the mentorship. So maybe you get in, who knows. And with all of that being said, I hope you enjoyed the video and I'm gonna see you in the next one. Peace.